Hello, Warriors. Let's have a good week. How are you, AJ? Hi, Bran. Hi, Kman, Jordan, Shahab, Mike. Hi, Ryan. Welcome back. Laura, everyone. So, Ryan, welcome back. It feels like Groundhog Day. You were gone for a while, and I think the euro's at the same price it was when we last talked. Right, buddy?
Uh-oh. Hi,
Yeah,
Dale.
I'm here, mate. Sorry, I had the button on mute. Yeah, it always helps the
Uh,
positions when it doesn't move when you go away, doesn't it?
yeah, just was here we are a week later. So trying to press it to the upside. What are you thinking here? Um, you know, it actually, it's held up pretty well in face of Geo.
Yeah,
What are you thinking?
it's walking the levels nicely, isn't it? We know the range is give or take 105, 107.
Yeah,
We've had a look at the downside. Now we've had a look at the upside. Got up near 107, held it. We're back, pretty much in the middle, give or take. I thought it might still remain a bit weaker, especially after that US data last week. If you look at just from a fundamental perspective, you've got US GDP at 4.9% and German GDP this morning at minus 0.1%. When you look
yeah,
at those two numbers, you don't think, I think I'm going to load up the truck with euros.
right.
But it's testament to the price action, what we're trading at the moment. The euro isn't weakening significantly, but neither is it going up significantly. So
Yeah,
the market's just probably a little bit uncertain going into obviously the Fed, one
yeah,
of the big events this week, about what it wants to do. But while it holds the range, it gives you something to trade until something changes.
yeah. It looks like if we got through 106 again, maybe we could head towards the highs again.
Yeah,
So, or if we take this little flag line out, lower levels. So, uh, coin toss, it's almost like you have to have a bias to have a position here, right? Because
yeah,
technically it's neutral,
yeah.
kind
It
of.
is. It is deja vu. We spent ages trying to get through that 106, 106.11, then the 106.40. You have to do all that hard work again. That we did the last
Yeah.
few weeks.
Okay.
But yeah, while you're waiting for something to happen, then you just train the range. You sit back, you try 105s or you try 107s,
Yeah.
and you don't need to put your house on it. And if you get a decent move, then you revert to mean and you get a good few pips out of it.
Weaker picture in cable
Yeah, not
still.
looking good.
Okay.
Yeah.
Probably take those lows out under 120.80. Is that
Yeah, and
high? Go, go ahead.
Euro sterling back above 87. I'm a bit annoyed about that. A lot of us jumped in last week. I certainly did, and I got stopped out in that spike down in euro sterling.
Here.
You had, yeah, 86, 80. I think I had my 80 or 85. I had my stop at
Yeah.
85. It was. I bought it from 87.20 down to the big figure. Stop at 86.85, and it hit 86.80 or something, and stopped out of that, but it's back up. So again, this one might be on the verge of just maybe setting up a new range above the old range. So if we can hold this 87 level, give or take what the Bank of England wants to do, then maybe we get a push up to 88. Then we sort of set a maybe 88 and a half, 87 range.
Yeah. It's doing nothing wrong.
Yeah.
Yeah. All right. Good morning, K-Man.
Good morning, Dale. Good morning, everybody.
How are you? So, on Friday, I just took a shot once we took out the 150 level. It seemed like,
Mm.
it was, it seemed like it was important that was kind of like a breakout and a failed breakout, but it's holding again here. Any
Yeah.
any differing view, or it's still limbo,
No,
man,
Bank of Japan
to this week?
expectation.
Yeah.
Yeah, Bank of Japan in what 13, 14 hours or so from now. Um, Yeah, it's still a case of whether and how fast the radar is willing to normalize, right? There's voices going up, a lot of people calling for another widening of the yield curve control, a bit of pre-Bank of Japan managing of the positions. Globally, the market is apparently still short yen, but the retail traders are not, and they are more long yen. It's just a case of how fast they normalize and how, as I said, the rest of the world is behaving around it. If Bank of Japan starts to normalize in a market where the rest of the central bank world is on hold for sure, likely, in my opinion, we have seen the end of the real hiking cycle. Elsewhere, yen could be on the move, but then the question remains of, again, how fast they normalize compared to what the government is doing, still injecting stimulus plans. It's, it's it's still going to cost a lot of money to be long yen for longer, and that is holding me back from really taking that side right now.
Yeah.
We could have a real reaction like we did the other times after the Bank of Japan, a lot of opium, and then take the other side. But I reckon it may go slower this time if the dollar yen goes up, because the rest of the world seems to be slowing down. Not after we saw in the US data last week, but those US data, it was a case of, oh, this is the last time we saw good numbers, and now we are going to see shite numbers again later in the US. So yeah, it's a bit of a wishy-washy before the Bank of Japan, and then we'll see whether we either go down to, yeah, that 148.5, anywhere between 148.5 or 147.5, or creep back up to the prior highs, you know, around 151, 152, and then decision time over there. I think the people calling for Bank of Japan move plus Ministry of Finance intervention at the same time are having a little bit of wet dreams about what may happen.
Okay, does this 150 level look important to you at all? I
No,
mean, not at all.
zero. No,
Zero. Okay.
really what happened around there is just a load of option structures were put in
Yeah.
place. We may have, well, I mean, they are never going to deny when they check rates or stuff, because it keeps the yen market on its toes. But to me, it's not really, apart from a bit psychological, like €105 dollar, 2K on gold, things like that. It's a
Yeah.
psychological level, but is it really an important level? To me, not really, no.
Okay. 10-year up almost 6 bips here. So any
We have
expectations from the Fed
I
this week?
think the more important one is going to be what the Treasury is doing this week. I agree with some commentators saying that FOMC may be ECB style, we are on hold and we are data dependent again, and acknowledging the risks and at the same time acknowledging that the economy is still roaring. But we have important data later this week, not in the least the labor
Yeah.
report, where the
Yeah.
market will again expect it was the last good one last time, and it's going to be a crappy one now. But no, I think the U.S. Treasury, what they are doing with their financing needs is going potentially to be a bigger mover for yields than what the FOMC may be.
When are they releasing that package?
There's the debt is released today, and the funding needs. I think the schedule is released on Wednesday prior to the FOMC.
Okay.
So we will know before the FOMC meeting.
All right. So I think Friday's close in the S&P was hard to buy. I do know there are some guys that have a counter trend type of thing happening here, is that we completed and now we're going to work our way up towards 43, 4,400, their wave counts. I don't know.
Well, the thing is, if you get mild misses and a bit of a dovish power, then you can see that rally. Yeah.
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 I think what happened last week was important, but I've seen weekly signals I think that was a pretty important breakdown under 4,200. And actually, we even took out the 50-week moving average. Okay, this is a weekly. So, I was looking for maybe the 200, but we'll see. I don't know. One thing I do know, and keep an eye on this for um, uh, whether or not the market really turns bad. You see this 23 we have on the VIX. It stopped right at the 200-week moving average. And if it clears that, I think that there's going to be a lot of compression to the upside because people are still selling vol. And you know what? The VIX acted poorly during the decline last week. Here's an example just on the daily. It made its high. Check this out. And let's see. So the VIX made its high at 23, and that was Monday. And the S&P Monday was here. Okay. Then the S&P did all of this, and you have had a lower high in VIX.
Yeah.
So I don't know what it means, but it means that, there's still complacency. Huh?
Yeah. Or they have half an eye on what's happening in the bond market.
Yeah, that rates might be turning.
Yeah, if the bonds find the bottom, perhaps your VIX is not going to go a lot higher.
Yeah, so bonds and the dollar rates and the dollar are, could give the market a boost if they cooperate.
Yeah.
I don't know. We have oil today, and our guest, Anas Al-Haji, it's going to be interesting to talk to him and see what he's thinking on the fundamental side of energy today.
Oh,
with
you got to
everything
stick around.
that's
We got to
going on.
stick around for that. That's going to be a really interesting interview, Dale.
Yeah, so good timing to have Anas dropping in here. So that's about, everything. This does seem like an important week. Like, for example, let's take Apple. So Apple broke down from its, took out its 200-day when we got under 170. So if it stays under 170, it's probably negative. It starts closing back above it. And on the weekly, and it looks like, you could say 1, 2, 3, a wedge, but a wedge from a high. Falling wedges usually happen at lows. So anyway, I'm confused there. But you look at the weekly now and look at the weekly moving average, the trend line, everything comes in at that 165 level. Plus they have earnings this week. So it's do or die for Apple this week. That's the way it looks to me. I think earnings will be the most important part of it. They could have earnings like Amazon and open 20 higher, or they could have earnings like Google and open 20 lower. It's, very binary this week for Apple. So that's, what I'm thinking coming in here. I don't have any, huge convictions. It's interesting because I did, but, after riding the S&Ps and the downside of the market, I can't get excited to put on new shorts down here. And I just don't feel comfortable buying it. So, the dollar is sideways. Just one line I want to show in the dollar. That if they take it out, it's this. Okay, everyone's kind of looking at this, and we tagged it last week, and it comes in around 106.26. And so far, you could probably say that after this move that we're flagging, I still think we're going to go after the high up here. But, even though I say that, if we start taking out that 106 level, you have to, say, okay, we're negating this thing and we could drop. So a lot of real, good or bad type of trades from where we're at, near inflection points with all this news this week. Should be an exciting week for traders.
Absolutely.
You know, I just feel like sitting it out
We
because I
are
don't have conviction. What?
we are facing the next decisive week, the most important week in our lives.
I know. But remember, it's a critical week. Huh?
Exactly.
It's a critical report. It's do or die on earnings. I know we're very dramatic, aren't we? So that's what I have. Blake, good morning to you. If you want to show what you're looking at with this red event week all over the place.
Hey, good morning. How you doing?
Okay.
So
Okay.
so just so everybody's clear, we have we didn't change our clocks here in the US, but everybody in Europe did. Actually,
Oh,
the rest of the world did. So it's a screwed up week, always is for us from a timing point of view. We're not broadcasting on YouTube right now. I think that our timing schedule got screwed up there. I'm going to try to get that adjusted. We're going to try to get that adjusted here and fixed just for the next couple of days, and then we'll be back to our normal schedule next week. It's always really screwed up this week.
And then
it always is, right, Dale? It's like
it happens here. Well, for me, it happens here. The week after next weekend, I believe.
well, yeah, we get our time change next week. So, but everybody, the rest of the world just changed their clocks this weekend. And
Right.
and matter of fact, the flow show, I totally forgot, was actually broadcasting as I was waking up, and I could have listened in. And you know, a lot of us in North America were like, oh wait, we could have listened into that. We could have actually heard the flow show, at least the tail end of it today. So I know it's kind of. We were joking in the chat room. I think Kman said we could just broadcast from one show to the next, and have continuous broadcast. It could have almost worked that way, right?
Yeah, good.
Yeah. So anyway, I know it's screwed up for everybody. So we'll be back to our normal broadcasting schedule next week. It was one of our presidents. I can't remember which one here in the U.S. that decided they wanted to do the time change differently than the rest of the world, and I was like, come on, anyway. So somebody would remember that anyway. So you were talking about Apple. Yeah, Apple's going to be a big week. It's interesting, Dale, when you were talking about the charts. I was sitting here looking at Apple thinking pretty much the same thing. It's like we're below the 200-day moving average, we're below the 38% retracement, but I wouldn't be really too excited about getting short Apple here when you could be just developing some sort of bull flag pattern. So that's a tough one, right?
Yeah.
Yeah. I mean, but earnings, you're right. I think you're exactly right. It's gonna matter this week. So anyway, that's regarding Apple. The rest of the markets, I want to say that the stock market is higher, today, because the ground offensive that we saw from Israel, I think is just not as bad as people were expecting. Some full-on offensive. It seems like it's like targeted smaller operations. There's not, it's not a full-fledged, ground assault. And I think the market's taking a little bit of, solace in that. You can actually see it, and this is just taking a step back. The dollar index is down a little bit, but it's not just the dollar; it's gold. When you got gold down too, and the dollar down, both of them pulling back because, you all the events over the weekend could have been worse, and it's not, and so I think that's why we're getting a bit of a pullback. You're seeing a really strong move in copper today. Yields are rallying again. You got bonds under pressure, so you got bonds, the dollar, and gold under pressure. So that just tells me that it's probably more of a positioning move that took place over the weekend. Well, you know, the lack of too much military operations has just allowed a bit of a pullback or a reversal in those positions that were maybe taken off ahead of the weekend or put on ahead of the weekend just in case. And then we have end of month as you guys have been discussing here. But overall, Ryan, you mentioned the UK, or excuse me, I'm sorry, German GDP data.
Yeah.
And the German GDP data, although it is, you pointed out, I think rightly, like, well, hey, you got European data is coming out at this rate, US data is coming out at this rate. Theoretically, the dollar should be stronger. It is, but it's still better than forecast, right? I mean, than the average forecast. We had German GDP come in a little bit better, even though it's still not anything impressive, but it is a little bit better than expected, right?
Yeah, but I'm talking in relative terms. You got one
terms,
country negative GDP and one country seemingly booming. I'm just saying it's no precursor on that basis to say, well, I'm going to load up the truck on the euro dollar.
Right.
Even if it was better than expected, yeah. Well, it's, instead of being minus 0.3, it's minus 0.1. If you're going to call that a win these days, then good luck to you.
Right. I mean, overall, you would think that the euro would eventually break down. I mean, in this situation that we're in, and when you're talking about growth but how are differentials looking today, Kman? Like in your view?
They're still in favor of the dollar, both versus euro, but very slow. A bit more pronounced versus sterling. That's still pretty wide versus the US at least. But yeah, I think we've said it. It's like a mixed bag of like numbers not being too bad or not that bad. End of month, we have seen already a couple of sessions where the euro is rather in demand, and end of month. Oh, I don't know. There's so much to happen this week, and apparently positioning as well, right? So a lot of people are saying that the dollar is a bit stretched in positions, but then we all know that it can stay stretched for weeks, if not months, in such positions. Yeah. So again, as Ryan says, we are between 105 and 107. It is a bit of a deja vu, where we had the same thing. Remember. After the prior month non-farm payrolls, where the dollar should have advanced a lot, but it didn't. So the market is seemingly also wanting to look through the good numbers in the US now, thinking that it's always the last good number that the US will print, and then the shit will hit the fan. So we are in the mix of all of these, without breaking out of ranges, the broader ranges.
All right. Well, hey, just I'm sorry, Kman. I didn't mean to
no problem.
Not listen to your last sentence, but just so everybody knows, YouTube will be fixed for tomorrow for the rest of the weeks. So our bad. We're getting those times adjusted now. It's always a screwed up week anyway. But yeah, hey, let me ask you this. I know you were having a conversation, or you and Dale were having a conversation about the BOJ and about possible yield curve control maybe being tweaked, possibly, but overall, and I think you made a great point. The 150 doesn't really matter. I think the BOJ is looking at the rest of the yen complex. It's not just a dollar yen at 150 story. It's a yen and how it's acting everywhere. So your thoughts with the BOJ is the tweaking is going to be very minimal, right? If there is even an adjustment. I
think I'm going to compare it to the one where they tweaked it the first time from 0.5 to 1%. And it is likely, well, if they tweak it, I mean, that's the big if, of course. If they do it, we are going to have a sort of similar move. It's the way they bring it over, the way they are saying, like, it may not be part of monetary policy, but we see the rest of the yield sphere elsewhere going up. So we need to, for the sake of the markets, we need to widen it again. Then it's going to have like a very short-term impact. and we're going to have a reaction like we had after the first time they tweaked it. And then it depends on whether the UEDA says, yeah, but we are revising our inflation forecast higher, so get ready for us to start normalizing monetary policy. In that case, we are going to have a bigger reaction on the yen. But then
and can I just interrupt you right there, because on Friday, it was late in the day, Friday, Nikkei reported that they are supposed to be adjusting their inflation forecast for 2024, right, to 2%.
Yeah, but that's already been talked about for weeks.
Okay.
The first time that came up was like early in October, if I recall correctly. That they are going to be looking at putting it at 2%, and some were saying perhaps a bit above, which was then the reason for a blip that we saw in the yen earlier in October. I think,
this probably this one here.
So yeah, somewhere earlier in October.
Yomiuri were the first to drop it.
Yeah, Yomiuri was very early in dropping that line. Thanks, Ryan. But then there's a difference between putting your okay. If they say okay, we are there now, then that means that they are shortly going to start normalizing monetary policy, and then we could have an impact. But it's
I still think, and I know we've only got 2 months left of 2023. I still think that the yen has the potential to be the outlier of this year.
You think that the yen's stronger?
Oh, well, I think that we could still get some volatility here, like some
volatility,
like high volatility in the yen, which, I mean, maybe we can get some sort of reaction, and it doesn't have to be, a total yen strength. I think it could end up being like, very whippy, going into the end of the year. But I guess it all really comes down to this week, because
I mean, that's it. You have to take the whole week as well into consideration, because you're not only going to have the BRJ, you're going to have the FOMC, you're going to have the labor report, the ISM, whatever. Imagine that the US numbers start to turn the corner, and we are finally going to get a weak ISM, or finally going to get a weak NFP later this week. Then of course your yen is going to trade a bit stronger, but then the rest of the dollar complex is probably going to trade lower too. But specifically for the yen, we're going to have to look at the reaction, and also rightfully said earlier, the reaction not only on the dollar yen, but what the rest of the yen complex is doing on the cross side as well.
Yeah. All right. Well, great summation of everything. Ryan Kman. I know you guys just came off the Flow show just like literally an hour ago, and then here you are back here on F.A.C.E, with us. So we appreciate it. Real quick, now, Dale, you have Anas coming here shortly. So
yeah, I just heard from him. He's only going to have 10 minutes. Something came up that out of the blue, but he's gonna
so is he popping on here in a second, or is he on here?
Yeah, I told him that's okay. So
okay,
I'll get what I can out of him in 10 minutes.
Yeah, absolutely, guys, because having Anas here talking about the energy market is exactly what we need at this moment based on what's happening in the Middle East. So with that being said, I want to wrap things up here as we have just a couple minutes. We don't have any really key economic data coming out. But Ryan, what's on your radar today? I know you were looking at the euro sterling, making a bit of a move, kind of upset about that. I mean, we are getting close to the 50% retracement once again. It's sitting right here at the 87.40 level. But is there anything else that's on your radar today?
I've nibbled a bit of Aussie Kiwi this morning short, playing the magnet.
You must have seen the trade-off last week.
What's right?
You must have seen the trade-off last week that I did with Chris Weston.
No, you have that as well, did you? What were you doing?
I was like, this is a key level up here. Yeah.
Funny enough, I'm recording my trade-off, and that's my play today this week as well. So great minds think alike.
Copycat.
Don't you start.
All right. So what are you seeing here?
Yeah, I've had a little nibble short there, just to test that level, because we know it keeps reverting around the 108.
If it gets above there, 110.50 is the next level up above. I know you got a trend line coming in there around 110, but that 110.50 is those prior highs up there back in June.
A lot of symmetry if it can just hold, but we'll I think it is a key level. Obviously, you can see on my charts. So
just want to play the techs, and that's the sort of pair, that's the sort of cross that will stay out the noise potentially this week, because we haven't got much data wise out of these guys. I don't think there's no IBNZ this week. I don't think. So yeah, if you want to get yourself away from the dollar and out of the volatility that may come from the yen and other things, then you need to look at crosses and the like and see if these ranges hold.
Yeah, well, and you got New Zealand employment later on this week, in the middle of the week, so that's really your probably biggest risk, I think. Okay, cool. And Kman, anything? I know we're going to take it over to Dale here in a second, but
He's
anything
not here yet.
from you? Oh, he's
Here
not
he
here.
is.
Okay,
Okay,
cool.
now he's here.
Okay, now he's here.
What's the speaker's name?
Go ahead, Kay.
What is the speaker's name? Perhaps I can propose.
Anas El-Haji, he's here.
Anas El-Haji, okay.
Yeah, he's coming over.
He should be promoted now.
Thank you.
All right. Well, hey, you know what? We're gonna leave it. We're gonna leave it with you, Dale. So you can. I know Anas has only 10 minutes. So everybody, thanks for dealing with us and the time change this week. I know it's screwed up. We'll be back to our normal program next week, and we should be YouTube broadcasting to later.
I promise
tomorrow.
to be back at my abnormal self by that time next week.
Right. Okay. So there you go. Dale, have a great interview with Anas and us. Thanks for being here. Kman, Ryan, thank you guys for cluing or getting us up to speed today. So appreciate you.
Cheers, guys.
Thanks, team. Good to have you back, Ryan.